We're going to give a chance for a few more people to join us before we get started. So probably another minute or so. Welcome and thank you for joining us for our 8th AAMA Member Connect webinar in our series titled COVID-19 Road to Recovery. My name is Pete Gustafson and I'm the Executive Vice President for AAMA. Today's program will be led by Megan Engel, a CPA and Senior Manager for Porte Brown LLC, a full-service accounting and consulting firm headquartered in the Chicago suburb of Elk Grove Village, just a couple of miles away from AAMA's world headquarters. Megan has over 12 years of experience with private businesses at Porte Brown. She's been a part of the Porte Brown team since she graduated from Judson University. Growing up in a family with a closely held roofing company, Megan has had a view into a family-owned business all of her life. She's worked with companies of various sizes and specialties, providing a variety of services, from meeting with clients quarterly to review their performance and discuss plans with management, leading teams on annual financial statement audits, and participating in special consulting engagements in various areas. She serves as a board member for the Tri-Town YMCA, as well as her local Chamber of Commerce. Megan also serves as a committee chair and task force member of the Illinois CPA Society. Megan's been overseeing AAMA's accounting services for at least the past 9 years, making her very familiar with our organization and industry. Today, she'll recap the webinar her firm held on Tuesday titled Paycheck Protection Program Flexibility Act and What We Now Know. After her presentation, she'll take questions from you, the audience. You can pose your questions by typing them into the Q&A tab at the bottom of your screen, and you can begin to do so now and throughout today's program. We'll do our best to get to as many as we can prior to the end of this webinar. If we're unable to get to your question, we'll provide an answer in the recap email you'll be receiving after the webinar. I've heard financial experts say the rollout of the PPP is analogous to building a plane while it's in flight. They're making it up as they go. But even with that, from my perspective, the program has proven to be a tremendous help to many industries, including ours, by providing much needed assistance during this time of historic challenge. And with that, I'd like to turn it over to Megan to take us through her program on the PPP Flexibility Act and what we now know. Megan, take it away.
Great, thanks so much, Peter. I really appreciate it. We'll go ahead and just get started. And like we mentioned, the goal of ideally what we want to be able to cover today is to give you guys the opportunity to be able to ask questions that you have and hopefully get some answers. And so I'm actually only going to go through just the one slide that kind of gives a quick overview. And so I'll spend about 5 minutes just kind of recapping the overview of what the Flexibility Act provided for us. And from there, we'll get into the real specific questions that you guys have today so we can make sure to try to get all of them addressed. So with that, I'm going to just jump right in here. And again, this is kind of just a quick overview of essentially what happened. So on June 5th is when the Paycheck Protection Program Flexibility Act was enacted. That's when that came out. The timing was really tense because it was coming right up against what most organizations who had gotten very early funding were just about to hit their 8 weeks. And so there was a lot of pressure in that last week to get it through, get it pushed, and just get it out. And so it actually ended up creating a lot of, the House being able to have a lot of control over it because it started there and then went to the Senate. And if the Senate had to push it back to the House, it would have gotten delayed even further. And so the House got a lot of control of it, ultimately what ended up being in this bill and pushing it all the way through. And so essentially there's, these 6 main components of what really changed affecting the PPP program and how that essentially is working. And so the first one is that it reduces the required amount, the minimum required amount of payroll costs down to 60%. So originally your loan forgiveness required that at least 75% of the total loan forgiveness amount would be based on payroll costs. And so that amount essentially has been reduced. And so it now requires that only 60% of your maximum loan forgiveness be composing of payroll costs. Now, a big question that's come up on this has been like, okay, what can I use all payroll costs? And we'll get into some of the reasons of why that might work, but what if it's 100% payroll costs? Totally fine. It doesn't mean that you only get 60%, it just means that at least 60% need to be these payroll cost related items. So that's the first major one. The second major change is extending the forgiveness covered period to be up to 24 weeks, to be a 24-week period essentially. And so you now then, if you got your loan before June 5th, you can elect to choose the 8-week period or the 24-week period. Anyone who gets a loan after the 25th automatically is going at that 24-week period, the way that the law is written right now. So that's essentially how that's working out. So it extended that, what the definition of the covered period was, to that 24 weeks. Now, the third item here lengthens the loan maturity to 5 years. So instead of being a 2-year loan, which is what was originally put out there, where you'd have 6 months of deferment and then you would be any amount that wasn't forgiven would be transferred into a loan, and that loan would be paid out and completed within 2 years from the initial funding date. Now that time period has gone to 5 years. Again here, for people who already had the loan, if you do end up not having full forgiveness and having to have a loan portion, there is also language that provides you the opportunity to work with your bank to also get this 5-year period instead of the 2-year period, if that's something that you want to have as an option. So there's that option there to potentially then, if you had it before June 5th, to also extend it to this 5-year deadline. But again, anyone after June 5th automatically is in this 5-year bucket. It extends the deadline to restore FTE levels, right? So it's June 25th, and for the last 8 weeks, we've been like, you gotta get your FTE levels back up for that June 30th payroll, because that's your safe harbor, that's what's gonna protect you, is on that June 30th payroll. And then all of a sudden here on June 5th, they said, oh, no, we're gonna push that out also with all of this as well. Now that recovery period is December 31st, that's when that safe harbor deadline is going to come into play, is on that December 31st deadline. So that's a pretty significant change, and I'll just say here, my personal opinion, the FTE is still the most cumbersome part of this entire program, still the most challenging. At the end of the day, is still going to be the driver of what leads to forgiveness or reduction in forgiveness. I think it's all, for most of our clients, it's going to be based on this FTE. It also did add some new safe harbors for that FTE level. And so there's 2 new factors in there for essentially what the FTE can include and, you know, how you can get out of that. And one of the most significant ones is based upon if you're reducing your operations, you're reducing the activity and the number of people that you can have because of abidance with OSHA, CDC guidelines about social distancing and how to operate your business, then that becomes a safe harbor. There's still a lot of questions around that and exactly how that works, how it works if it only applies to part of your business and not all of your business. Does it only factor the employees would it be, or does that mean you get safe harbor for everybody? So there's some areas around this that we still need to get some answers to and some digging on. And I've even reached out a couple of legal friends this week to try to just get their opinion. And I know they're working to kind of get their head around this too, to be able to provide some guidance as well. So this is an area that we'll continue to see development over the next couple of weeks of what that looks like. And then the last one was the deferral of the payroll taxes. And so if you're not aware, originally in the CARES Act, there's a lot of provisions beyond just the Paycheck Protection Program. There's the Families First Coronavirus, there's other potential employer credits if you have a significant reduction in activity and business activity that you can get for payroll and things like that. And so there were a lot of different provisions that essentially were put out all at the same time, and everyone gravitated to PPP. One of the other things that was put out was an option to defer paying in the employer's portion of Social Security that is due on a normal, regular basis with your payroll taxes. And so that was one of the things that was provided initially. And essentially the way that it works is that you would not pay in just the employer portion of Social Security. You would not pay that part in. Everything else would still get paid in, but that amount could essentially be retained, accrued on your books. And instead of being due every paycheck period as it is right now, or monthly, depending on what your requirements are, Instead, that amount would be due 50% of everything you've accrued during this period. 50% of it would be due at the end of December 31st, 2020, and then the other 50% would be due at the end of December 31st, 2021. Now, the way that it worked out originally was there was a lot of back and forth and unclarity with this. And so people were like, can we do this if we're doing the PPP? It seems to be very confusing. And so it started off where it was, no, you can't do both. Then FAQs from the SBA said, okay, well, you can do it. You can defer the payroll taxes for any payroll that's occurring up until the date you get your loan forgiveness. Then once you get your loan forgiveness, you no longer can take advantage of the deferral. So if you got your loan forgiven in August, you know, payroll between March and August, you'd be able to defer, but then everything after August, you have to go back to your regularly scheduled programming and timing on that. And so the Flexibility Act basically just said, you can defer. Everyone can defer. Everyone can defer the payroll tax. So you have the option to do that. And I'll just say, the one comment I always like to make specifically around payroll taxes is, you know, this is one area the IRS does not mess around. They don't mess around with payroll taxes, and they'll come after you for the payroll taxes, and it's areas where if there is negligence and fraud, they have the ability, you know, you can speak to your legal counsel, but from the way I understand it, if there's negligence and non-reporting, they actually, if they felt like they needed to, could actually go after the owners personally for things related to payroll taxes. So payroll taxes is not something you want to mess around with. So if you're going to choose to take advantage of this deferral, my one piece of advice would just be, make sure you actually can pay it when the bill comes due, because it's still going to have to get paid at the end of the day, and even though it's getting deferred. So if it's a cash flow consideration, you're not all worried and you think it'd be great to just help cash flow out, and it's something to start looking at maybe taking advantage of. But otherwise, you know, it's just something you might want to just make sure you're really comfortable with it, essentially, if it's something you're going to go after. So with that, that's the bulk of essentially the just quick and dirty of what changed. And so I know that a lot of you have probably been kind of following this and keeping track. And so again, we just really wanted to get into an opportunity for you to all be able to ask your specific questions. So with that, I'll kind of just open it back up to Pete here, and we can kind of take a look to see what questions we might want to address here.
I'll start with one that, thanks, Megan. Thanks very much for that kind of recap of what they've changed in the PPP program. Rich Babbage, who's the treasurer for AAMA, came in with a question. Please discuss in more detail the full-time employment safe harbor. In particular, if we qualify for full forgiveness by June the 30th, but do not meet full-time employment because of health department ordered closures, and only for this reason, are we okay for forgiveness?
Yes, so the FT safe harbor gets interesting, and so I'm going to pull up here. This is the safe harbor parts that we're talking about, and the health department ordered closures, right? So the safe harbor number 2 here, you're exempt if you aren't able to return to the same business activity levels due to compliance with health mandates or guidance from CDC, Prevention, Health and Human Services, and OSHA, right? And so this is the one that they kind of put out there that it's really interesting to see. Does this apply to everybody? Is this sweeping and how it's going? It sounds like it is. It sounds like it is. And so the one thing I would just say on this at the end of the day is going to be, we are still expecting for there to be the FAQs. Hopefully, it sounds like what happened was they put out the loan application. They started doing the FAQs to address some of the technical issues. Then the Flexibility Act came out, and the SBA basically had to rip up all of their technical responses that they had started putting together on that, and they had to start again. We've also heard that there is still a good possibility of another version of the loan forgiveness application coming out. So for those of you who may not have been following, there was the initial one, and then when they put out the loan the Flexibility Act with June 5th, now all of a sudden we have essentially now a regular form and what they're calling an easy form, but again, you still have to do a lot of work on the back end to figure out if you can qualify to fill out that form. Anyway, we're not getting into those forms specifically too much, honestly, because we expect they're going to change still. We actually think there's going to be another revision. It sounds like that's coming down the pipeline, and so we're trying to avoid spending our time burying something we know that's going to change it. So on your question, right, which is, are we going to be okay? The answer is, we don't know 100% for sure. It sounds like they're trying to make it okay, right? It sounds like everywhere they're going, I think that the guidance they're trying to put out there, the legal side they're trying to approach, they're trying to make this as easy as possible, and they're saying, hey, what do we want you to do? We wanted you to keep your employees, we wanted you to keep them paid, and keep them going, even if you weren't able to operate. And we created these safe harbors because at the time we created it, we thought everyone would be back up and running by June 30th. That's pretty much what they thought. When they put this law back in March, they honestly thought, by June, we'll all be back up operational, be totally fine. That's why we put these safe harbors in. So even if you have this huge detrimental effect, you'll be okay by June, you'll have been able to restore. And the Flexibility Act reaffirms that, right? It reaffirms that method of care of saying, hey, we want you to get this money forgiven. We want to make it. And now we're saying, okay, maybe not by June, but hopefully by December, everyone will kind of be back to where we're at. And so, I think at the end of the day, we're going to rely heavily on some of those technical questions to really get into the specifics of that. And I'll just say this specific one is exactly how this one works, is the one that I've really been looking to some of our legal counsel to kind of get some answers on. I started shooting out some emails yesterday on it, because I think this is going to be the new one that the legal side is going to really be focusing on to exactly what it means for the law. So my recommendation essentially would be, at this point, if you've spent all your money by the end of June, I'd start getting all that information together. I'd start working with your accounting firm, or if you're doing it all internally, start putting what that loan forgiveness application would look like, look at how it factors, and then you might just want to hold and wait. You might just want to wait, because you've got 60 days from your ending period to be able to file it. It might just be worth waiting for a couple of weeks to kind of see where is this going to fall out, what are some of the answers going to be, because the worst thing that you can do is put an application in and then have information come out later that would have given you some of this exemption. You can't hold on forever, of course, that's not going to work. But I think in this interim, we're in this point where by the end of July, hopefully we're going to have a little bit more clarity on this. And that's, like you said, building a plane while it's near. That's so true, Reed. This is exactly what's going on here. And so it's like you're running and then taking 8 steps back and then running forward again and then going backwards. And so it's a lot of doing that. But what you can do is kind of just start to look at the situation that you're in, start to put these numbers together, get all of your backup, get it all set, and kind of do some analysis of what happens if this works, what if it doesn't, and then you really just got to work with your trusted advisor to try to make the best decision you can at that point.
Got it.
That's a non-answer answer, unfortunately.
Yeah. Well, I guess that's what's required at these times, right? A little bit of, it's about as clear as mud at the moment, huh? Yeah. I got a question for you, and it has to do with the change of going from 8 to 24 weeks. All right. Let's say I apply. Can I apply for forgiveness in less than the 24 weeks? Let's say that I use up the payroll, 100% of it in payroll in 12 weeks. So I'm not using the money going forward after that. Can I apply sooner than the 24 weeks, or do I have to wait till the end of that?
Yeah. So that's a good question. I actually have a slide on that one because it's a very common question. So I'll pull that up really quick for you guys to see. But so interestingly enough, there is one line in the application that suggests you will be able to file it before December 31st. There's one line in the application that basically says, and it has to do in the FTE section actually, ironically, about restoring it through the date the application is submitted or the end of the time frame. And so the way that it implies, because it doesn't say through the date of the end of your covered period, which is what would suggest that you would be required to be mandated into that 24 weeks, but because the language says through the date that the application is submitted, you can do these calculations for these FTEs. And so a lot of people are kind of pulling on that and saying, okay, it sounds like they're starting to say, okay, if you've used up all your payroll and you've gotten to this point, and I think that's happened for a lot of clients. I've talked to a ton of mine that said, because of the way that the calculation is, we weren't able to use all in 8 weeks. That would have been really difficult. We would have been, I'm sure you guys may know, the questions that we were getting 2 weeks ago was, should I pay bonuses? Should I pay bonuses? Should I pay bonuses? Should I pay bonuses? I got that question 8 times a day. Should we pay bonuses to our employees to just use this funding up so that we can get that 100%? Because we're not naturally going to get it, even though we've retained everybody, just the way the calculations work out. And so then when they're like, oh, now you go 24 weeks, everyone's like, okay, great, I don't have to pay the bonuses, I'll just go a little bit longer. And so now I'm hearing from everybody, we're gonna hit it at 10 weeks, we're gonna hit it at 12 weeks, we're gonna hit it 100% with payroll at 13 weeks, and then we won't even have to worry about any of these other, mortgage, utility, transportation, any of that junk. We've got just payroll, we know we're good. So does that mean that we can apply? And the biggest thing that's gonna come up here again is gonna be this FTE reduction. And so at the end of the day, if you're still operating and you were able to kind of bring your employees back up and be able to pay them, you were paying them throughout the entire period of time, and now you've kind of regained operations, if you run some of your FTE numbers, that's gonna be part of your deciding factor. So I would recommend that if you've gotten to this point and you know you're not gonna need the full 24, once you get to the point where you're like, okay, we know we've used the money by week 10 or week 12, let's put the information in, do the calculations, put it together like you're gonna submit it. Look at how that FTE affects you, because at the end of the day, if your FTE is down and there's slight reduction, then maybe you're gonna hold off, but maybe you're not, because here's the other thing to think about, right? That I've been having a conversation with a lot of people where, we're busier. We're not maybe seasonal completely, but we're a little bit busier in the summer, or we know we're okay now, but we expect actually that our industry is gonna get hit much further out, that maybe we're working okay now, we've been all right, but it's really gonna get worse in December. And so maybe I've been able to maintain 90% of my full-time equivalent up till now, but in December, I could be down to 30. And so then the question comes in, right? Like, does it make more sense strategically? Do you apply even though it doesn't mean full forgiveness, to avoid potentially having even less forgiveness in the future, right? So this starts to get really more on the consulting and analytical. You have to really start to think through, but the only way you can start asking those questions is for you to start looking at where you stand. And so the best place to do at this point is, as soon as you know you've spent those funds, put that information together, start to look at it, fill it out as if you're going to submit it, look at what the result would be from you from a financial base if you don't get the 100%, if you're hit by that FTE factor, if it's going to affect you, and then start again, have that conversation, start doing that analysis, and kind of just take a look to try to figure out what the best decision is going to be going forward from that standpoint.
Got it, thanks. Tina's got a question. If we didn't receive our PPP funds until after June 5th, are we required to use the 24-week period, or do we still have the choice of 8 weeks?
That's a great question. So if you got your PPP then after June 5th, you are required to then use the 24 weeks. Now it's interesting at the end of the day, because if you end up being able to submit before the end of the 24 weeks, then it's not really a set 24 weeks, right? Then at the end of the day, it's still this concept of up to 24 weeks. And so it might not be quite as much of a hindrance as people are worried about it being, but again, we'll get some more answers on that specifically, I expect, in the next couple of weeks, about whether or not you're going to be able to file earlier. It's, I've said this on Tuesday, it still blows my mind the number of times I'm answering the question with, we just still don't know. We still don't know, we're still waiting. It's 20 days since this law came out, and they still haven't addressed the answer of, can you file quicker than the 24 weeks, or do you have to go the whole 24 weeks? There's a lot of really questions that have been out there for a while that are still out there, and then new questions that have come up that no one seems specific on being willing to give an answer to. It's been interesting.
Okay, you make your job a little more complicated, I guess. Yeah. I have another question for you, Megan. If I go with the 24 weeks over the 8-week payback, can I increase the amount of payroll that I ask forgiveness on?
Yeah, so that's a really good one, and that's another factor to start thinking about. Especially actually the question's been having, but especially here, if you know you're gonna have a reduction in FTE, right? So one of the things that did become clear when the new application came out was that you are gonna have a higher amount of compensation that essentially is gonna be covered by the PPP. So for employees, historically, it was this $15,385 amount here for the 8-week covered period, and that's what everyone was going on, 8 weeks of $100,000. And then we started talking about this law that was coming out that was going to extend it to 24 weeks. And Mark, who who presents with me, him and I have been kind of doing all of our presentations, so him and I are back and forth on these conversations all the time. And we're on the phone and we're like, they're not seriously gonna make it $46,000 a person, right? There's no way that they would do that. It just doesn't make any sense. You then would, you could essentially cover it with half of your employees, but that is exactly what they're doing. So they do now have it where if your employees, if you go longer than that 24 weeks, the calculation is showing that you can have a max of 46. It does reinforce, that application of essentially it's the number of weeks incurred based on that $100,000 over a year. So whether it's 8 weeks, if it's 12 weeks, that amount's going to be a little bit different from what your maximum amount is if that's the period that you run into. And so you're really going to kind of do that math. But essentially what that means is you're going to be able to have more covered payroll for individual employees. So you don't have to bonus people out, right? By the end of that 8 weeks, that means you get to include more of their payroll in. It also means though, of course, then that you should hit this much quicker than 24 weeks in theory, right? If you're paying payroll consistently. But now if you reduce your employment by half, right? So now you're going to need all this extra that you can include. So if the number of people that you're paying is reduced by half, but the amount that you can, deduct per person is doubled, that's going to help ensure that more of your loan ends up getting forgiven. And especially if your reductions have to do with all of those provisions that have been out there. So there's the 2 new ones that came out, but I'll just cover really quickly again, because I think they're important. Do I have that slide in here? I'm just taking a quick look to see of what the so there's these, there's these other exemptions that get out here too. So employees that were fired for cause, if they left you, if they request and received a reduction of hours. So there's a lot that they have put out there to try to help alleviate this full-time exemption calculation. And so again, I think the law is kind of just working in that same direction where they're really trying to move to the fact of, giving people as much forgiveness as they can and trying to give them the ability to have the reasons to be able to get out of it. And so if they didn't up this to the 46 and you had to reduce half of your staff because they resigned or you had to fire them, then you'd really be stuck. You'd really be stuck if you still were only at the 15 per person. So it really, again, is just providing for more of that. The interesting part about that I'll just point out is that applies to employees. It does not apply to the owners. So for you as an owner, you are still capped at the same amount. So the $15,385 if you choose to do the 8-week option, but if you go longer for that 24, you're actually capped at the 2.5 months of your income essentially. So the owners are not going to be able to be at this $46,000 level. They're still going to be capped at a lower amount. So again, just getting back to that point of trying to make sure that people aren't internally pocketing this completely on their own end and being like, oh, I fired everybody for cause, so now I'm just going to get this all for myself. And they're still doing something to try to keep it a little bit manageable and relying on that to make sure that the people who are truly benefiting is the owners and somewhat, but really the employees also, keeping that area in there. Got it.
Well, Megan, that completes the questions that we've received. Here we go. I've heard there is some talk of automatically forgiving the smaller loans, perhaps under 100,000 or under 200,000. Have you heard anything like this?
Sorry, just say that questions is, they're in the chat. There we go. I just sometimes help a little bit. Automatically forgiving small loans. So there's been a lot of conversations about what the next steps are that need to come out for this. And from the loan forgiveness, I think that's where they were trying to get to with the easy form, honestly, was to kind of say, okay, you can fill out this easy form if you meet these specific requirements. So those requirements had a lot more to do with full-time equivalency and wage reduction. And they're basically like, oh, if you don't have any of this and you can fill out this form, there's less that you end up having to submit with that, but you're still required to have it all as backup. So I do think that there is a push to try to make it easier for some people with these loans to be able to go through an easier process, right? We know for sure anyone over 2 million, they've already proclaimed that they're going to go and do a more in detailed review of those. So we know that those are going to get looked at, but there's a lot that are under 2 million. If you actually look at the statistics, the number of loans, the average loan on this I'm trying to jog my memory here, but it is, the average loan on this is in the, it's a couple $100,000. It's not significant for the average loan size in this program. A majority of them are these smaller loans to smaller local family-owned businesses and things. And so there is a big push for that. That's also part of the reason we think there's going to be a revision to the applications, because we think that there's a good chance that easy will kind of be modified a little bit more to make it more clear, and hopefully actually more easy for somebody to fill out and to know if they meet the qualifications. So again, that I think speaks a little bit to the fact of just thinking about, again, this hurry up and wait concept, right? Like we want to get it forgiven as quickly as possible, but at the same time, the longer we wait on some of the stuff, is it possible we're going to find out more favorable terms? Is more going to be done to help ensure that we're getting the maximum forgiven? So it's a lot of that. It's a lot of, if you're going to hit the forgiveness, go for it, get it in, get it filed. But if you're in that waiting zone, you've got a couple of little sticklers here that are maybe holding you up. That's the part where just being patient, unfortunately, and still waiting is going to kind of benefit you in the end.
There it is again.
It can get worse. I don't think it can get worse. I mean, I'll just say this. I don't think I've seen anything come out that's made it worse. More complicated, more calculations, more back and forth, maybe, but I don't know that anything has come out that's been like, oh, well, that's going to make it even harder for people. I think the majority of it at the end of the day is like, okay, just baby steps and making it easier. So, so the waiting concept is frustrating, I know, but I guess I would just say that it hasn't seemed to have been a backfire yet.
So circle back at the end of the July, you should have a better understanding of what the program's going to ultimately end up looking like.
Yeah, we hope so. And, a lot of the program provisions that, the other CARES Act provisions that have come out, a lot of those, the unemployment that expires June or July 31st. So there's also a lot on the table having to address the deductibility. That's the big one right here. That now we've kind of shifted to look to. So if you've gotten to the point where you've moved beyond forgivability, the next thing you're going to want to start looking at is deductibility, because the way that it stands right now is that the income is not taxable, which is fantastic, but it also stands that the deductions are not deductible, and that's standard. That's just basically the way IRS law has always been written. A lot of businesses never encountered it because they weren't getting funding directly from the government, but it's always been like that if the government gives you a grant, essentially, which is what this is ending up being, a grant of something, that if you don't record the income, you don't get to record the deductions because the government's paying for it, you're not paying for it, right? So this was the big thing that kind of came out, and the IRS affirmed, this is what the law currently says, and everybody basically was like, we're gonna fix that. We're gonna fix it, we're gonna allow you to still do the deductions, because what ends up happening at the end of the day is that, if your business was completely shut down and you have no income, at the end of the day, that's not really going to matter because you'll have this income, you won't be able to take deductions. Well, that's fine, you've got no income to put those deductions against anyway. But if you were still operating a little bit, if you were still operating, there are some companies out there that, they were able to pivot and shift and change and some of the stuff they were doing, and they've actually done okay, or some of them done really well, and who knows what will happen. But for them, what that means is all of a sudden, if they can't deduct, $300,000 worth of payroll costs that they normally have, that essentially is going to create an additional $300,000 of taxable income for them, right? And so that's the next big focus, is really looking at, okay, what's the government going to do about this? Because we really need to start thinking about, tax planning. Do I need to be paying an extra 30-40% on that $300,000? Would it have been better for me just to kind of sit back and not do anything? And that's the questions that are kind of coming up now, as you start to look at this and what the impacts are and how it's all working. And so it's been really interesting, just kind of moving to that. But again, there's still just a lot of baby steps we need to take moving to the right direction and getting some final clarity. And we're 3 months into this, and we've got 6 more months till the end of the year, but only 5 more months till an election that could potentially change a lot. So it'll be interesting for sure to see what ends up happening.
Stay tuned.
Yeah, exactly.
All right, well, Megan, that ends the questions we've received. I want to thank everyone for joining us. I want to thank you for giving a very insightful presentation and a snapshot of just what's going on with the PPP and what we need to know. And of course, I've got to thank my team members, Tina Schwartz and Alex Reichsdorf, for being the producers of these webinars. Heck, what was it, 9-10 weeks ago, we had never done a webinar before. So getting this off the ground and going as quickly as they did, my hat's off to them for making this happen, because without them, it wouldn't have. So until next time, this will be coming out and a finalist, or I'm sorry, in an email to everybody that's participating, and we'll put that out online in our social media so others will be able to have access to it. It'll be on our website, archived for the future for you to go back to. And we'll be announcing our next webinar coming up next week shortly. We're just kind of putting some final touches on that. So as I said earlier, stay tuned. I want to thank again everybody for joining us. Have a great rest of your day. Thanks.
Thanks, guys.